Good morning, everyone. Ballard360. This is going to be what we call my stats brief. I want you to know this is kind of my opinion. It's not disseminated by the board or supported by the real estate thing. This is kind of my take on what's going on in the market, in the real estate market since the last 6 weeks that we've had this COVID-19 virus and its impact. So I'll get right to it. It's supposed to be a short thing. Basically what we're seeing, I think, and I'll start with kind of some of the big, larger markets, Vancouver West Side, West Vancouver, and the stats that are coming out over the sales in April. And let me back it up. We had, as everybody recalls, we've had a slow couple of years. All the taxes came in. Foreign buyers tax, vacancy tax, and speculation tax. The increase in the property purchase tax affected the volume in our market and a drop in real estate prices over the latter half of 2016, 2017, 2018, and 2019. Okay. Now in the fall of 2019, we had a surge of pent-up demand that was starting to come back to the market, and so our volumes doubled. So when we talk about doubling volumes, I always go back to the barometer ratio that I look at that I think is very important. It's called the sales to actives ratio. And at 15%, it's considered a balanced market. When it drops down to sort of 12%, we start to see downward pressure on the market, and we call that a buyer's market. And when it gets to 18 to 20%, that's upward price pressure, and we're running through, a fifth to a quarter of our inventory every month, and then buyer choices gets reduced, and it really is sort of a market that's dictated by the seller. Okay, so we had for the last few years on the west side in West Vancouver quite dismal volume. And the sales to active ratio was single digit, which is very low. Very rarely are we actually single digit in those markets. And certainly over the last 20 years, we haven't been. But that, 2 to 3 year, 2.5 certainly, years where the market was single digits. And we were sitting at 4 to 5% of sales to active ratio, which is very low. And then in the fall, we saw that double. Now it doubled to 8 to 10% in both the west side, West Vancouver, some demographics in some of the other cities in the lower mainland. And what that meant was that was a huge kind of uptick in volume, but actually not to the level that we'd previously seen, and certainly not even to that 12% mark where there would be a relaxation of the downward pressure on prices. Okay, and so and certainly not anywhere near what we'd call a balanced market. Good news, yes. This year in the beginning, January, February, March, very strong. COVID kind of came and hit us in mid-March, and in a lot of jurisdictions, March was still carried on from a strong 3 or 4 previous months in the fall of 2019. And so March stats were actually quite strong, okay? And since the COVID came in mid-March, now we've had that 6-week experience, I can say quite confidently that West Vancouver and the west side of Vancouver have basically fallen back to their 2017, 2018 levels. And really no more impact than that. We have so far this month about 20 sales in West Vancouver, and March was 40, and February was 45, and quite normally we see 50, 60 sales in West Vancouver, and we're sitting at 20. And 20 is what we were seeing throughout 2017, 2018, and in spring of 2019. So that's not really that huge an impact. It's kind of more of the same, right? That's solidly in buyer market territory. That's solidly with some downward pressure, not pressure on prices, but that's not a free-falling market for sure. Same thing on the west side, almost exactly. They're sitting at 8%. They've had 31 sales, 33 sales to date. This month, March was about 107 sales, and January was 62 sales. And then that was a strong market a stronger market in the fall, showing 80 to 100 sales. And we'll probably finish off the month around 40 sales. And again, pretty much the same kind of intensity and sales volume that we saw throughout 2018 and beginning of 2019. So that's your markets at the top, okay? I'll use North Van as a good case, but this would cover off a lot of the outlining towns. North Van, there's in sub-market, and I separate them at say 1.8 and above. It's behaving a lot like West Van and the West Side. You know, at over 1.8 million, you've got 163 active houses listed over 1.8 million, and the month-to-date sales are 10. Last month's sales were 18 and 24 in February. Okay, so you know. That is about a 7 to 8% sales to actives ratio in the 1.8 and above in North Van. That's entirely polar opposite of what we're seeing with 1.8 and below. 1.8 and below, we've had 90 sales to date, and there's only 250 listings. So we're literally at a 25% sales to active ratio in the under 1.8 market. And what's that done is that's driven by affordability. These are houses, and I'm talking about single family houses, and these numbers, condos are mimicking this, okay? A less expensive, more affordable market is quite hot in the lower mainland. That coincidentally, I think, tunes it with an age demographic that is younger, a little bit more tech savvy. I think they're a little bit more open to using some of the COVID protocols and are more comfortable with that. The older generation who's on the other end of the market, buying the more expensive properties, are the older person, more established in their economics, and that maturity has twofold. First of all, they're not as tech savvy, so they're more touchy-feely. They want to go into open houses. They want to go see a property rather than sort of rely on virtual tours, Matterhorn, 3D floor plans, and things like that. So what we're seeing is that demographic is not as active as that young demographic. And the young demographic in North Van, we're seeing multiple offer situations. We're talking at the RE/MAX sales meeting, and 3 or 4 sales that went down in North Van, people that attended the meeting, were all multiple offers. All 4 or 5 offers. You know, this is the $1.3, $1.4, $1.5 million sales in North Van, and it's pistol hot. Certainly upward pressure on price. We're going to see price growth that ripples through the market and supports the higher sales. Even though we're lacking volume in the higher end, that's going to be price supportive as it ripples through the upper market. Again, we're seeing that in Richmond, we're seeing that in Burnaby, and that lends itself quite well into the multifamily or into the condo market. In the condo market, literally to give you a snapshot, as using North Van as an example, but this is consistent throughout the lower mainland, is they're running about a 16 to 18% sales to actives ratio in all condos sold. We've had 50 condos sell to date. That might wind up at the end of the month being somewhere around 60. We had 134 sell in March, 134, funny enough, exact same number in February. I had 76 in January. And so those were pre-COVID numbers. The COVID numbers are certainly 60 sales is certainly supportive when there's only 350 listings in all of North Van, and you're selling a sixth of them each month. So that is certainly well above the 15% balanced market. We're solidly in that market, sub-market, totally into the seller's market with upward price pressure on prices. And we've got a lot of new construction coming on, and that new construction is being absorbed quite amazingly. So in having said that, a lot of those pre-sales were done pre-COVID. So it'll be interesting to see what the effect is going out of that. Anyway, that's the stats brief. That's the numbers. If you're a numbers guy like me, then you like this kind of stuff. Anyway, we'll be back. We'll try and do this periodically every week or two, and keep you number guys, your number files happy. Okay, tune in again, and we'll see you later.